Hello, I'm Robert. Welcome to my channel where I talk about everything automated algorithmic trading, or simply algo trading. If you followed my last couple of videos, then you'll know that I have been testing some aggressive techniques, with my last video talking about a process called clustering. Well, I set that up yesterday and I let it run overnight. This morning when I woke up, my margin was fully consumed. I didn't have a margin call because my account was extremely limited. I actually only used 45% of my total account. Shortly afterwards, though, the market dropped significantly. Referring to the video I posted recently, in fact I think it was yesterday or the day before, I talked about the cluster that I had accumulated when the market rallied. Well, this morning that cluster completely sold off. The whole cluster, and it just really went to town. So I went from $72 of margin to $77 of margin just because of that cluster sell-off. And as you can see right now for the Euro USD, I have $77 of margin with $41 used. Now because it consumed my margin completely, I made a modification to the program so that once it reaches 75% of my margin limit, it slows down and doesn't use clustering above that point. I don't want it consuming my entire margin that aggressively when it starts to cluster. I may end up lowering that threshold a little more as I continue to spend the week watching the numbers and researching. But at this point it seems like a reasonable place to start, where I have 25% of my margin remaining non-clustered at all times. So if I have a large market movement against my position, I'm not burning the market margin levels up too quickly. So let's get into the log and really look at exactly what happened. Now this is the bottom of the log. Let's go back to the top of it. Back to when the margin really just unloaded. Okay, here you see where I added a little more budget. 161. Right here my budget is 212. This is where I added an additional $50 just to make sure I had enough to test the clustering and I didn't want to overload my margin usage. So you can see 7 a.m. I start buying and selling. That is the replacement process of the clustering. And you can see with each position size that I used and replaced with. This part of the algorithm doing what it's supposed to do, finding the lowest position size that it can use based upon the two starting points I gave it, which were prime numbers of the balance itself. Now here you see I'm using only 33%, or $33 of the $212 my margin has. So a very small amount, very limited, where I deliberately keep everything very, very controlled, just because of what happened this morning. I didn't want to risk blowing my account up, so I kept very tight, very restricted limitations. So what this translates to is that my maximum margin at this point in time was not allowed to go above $72, roughly 42% of this amount, or excuse me, 45% of this amount. So this is the margin when I started the clustering process. You can see the clustering at work, where it sells and buys immediately afterwards to replace the last order. And you can see it's quite aggressive. Then I run into the market, 3 positions that go completely against me. So it purchases. But then we get into another massive cluster sell-off. Huge. And you can see here from each of the balances. Not only do you see the margin, but you can see the balance slowly increases as it goes through this aggressive buy-sell cycle through the cluster replacement process. Now this is the London market. I added a process to the program where I can track exactly what market is most profitable for me. So here the Euro USD is going insane in the London market. And you can continue to see the balance just growing ever so slightly as this really just continues the aggressive buying and selling constantly. Okay, we have another market shift where the market just went against me a little bit, but then it goes back in my favor. And you can see with the last one, we started out at 212 and it's already up to 214. So it gained roughly $1.75 to $2 with that last aggressive cluster. And it looks like another aggressive cluster of buying and selling. And you can see my margin really beginning to climb, as well as my balance. And you see each of the position sizes that the program is picking based upon a mathematical algorithm of prime numbers. Now that process is done through 2 points. The starting size is 20% of the count, but the closest prime number to that 20% becomes the starting unit size. But more importantly, the part that matters is once you have the starting unit size, the program uses that to pick 1/2 and then the closest prime to that 1/2 based upon wherever it's at within its current unit sizing as it accumulates and builds its position. So you can see here the numbers constantly changing for the unit sizes as it makes purchases and sells off, with each one being replaced as necessary, appropriate to what it was doing. So you can clearly see just how powerful this process is and just how lucrative the concept of clustering really is. Now up here we're in strictly the London market, but through the rest of this it is the London-New York market. So the overlaps of the London-New York market are driving this particular cluster. And we continue down, 215 for the balance. So roughly 215, then we have another brief pause, and then the cluster continues a little. 216. So basically this cluster drove the entire balance up 2 cents. And you see though that our margin is continuing to grow because of the aggressive clustering replacement. And you see that within the unit sizes as it continues to scan the trades it has. Because of the first in, first out regulation, it can't use the same unit size twice. So the algorithm has to use a unit size closest to the lowest value it can that fits within its prime number algorithm. Now, of course, the unit sizes themselves don't have to be prime numbers. As you can see, 78 is not a prime number. Neither is 63. So you can see that the algorithm is very flexible for trying to figure out what unit size to use. And it's very dynamic in the process. Now we continue further. And we see that the clustering continues quite aggressively, with a small and brief, and then the big run, the big push, where the cluster just sells everything off. And you see here, 216.40, 216.63, then 216.83, where it just completely unloads and builds up its margins. We start out here at $52 margin, and then we're down here at $78. It completely just gets ready for the next major run and really packs up and builds that cluster heavily. A new level of resistance from the charts that I showed you yesterday. Here, same thing. Builds up. It continues the process. And it continues to build. So if you look at our margin, now we're up to $78 a margin. So as the balance increased, so did the margin limitations. Now it's still a little glitchy, as it doesn't always stay exactly below the margin limit, but because I have such a wide amount of space, I'm never at risk of a closeout or a margin call. But it is a bug I need to fix. So you see a couple of sell-offs. We're down to $77 a margin. Then we do some more heavy buys. And you can see the unit sizes. $80 of margin. I have completely used all of my margin at this point. And this is the first trade of the London-New York session. But you can see the build-up took place during the Tokyo-London session and the Tokyo-Sydney sessions. So here we are, $80. And then you see the big sell-off. And you see just how the balance continues to build aggressively and how the margin begins dropping. And then finally, $76 to $52, and you see how the balance continues to escalate as the exchange begins to really tally all of these orders up. And you see it continuing. Order sizes completely random and unique. Balance completely growing. Margin used shrinking. As we continue to examine these results, I cannot underscore how critical it is to understand your risk and your budget. While these results look wonderful, and they are wonderful, in fact, this is the most profitable day I've had since I started this bot. It still needs to be said very clearly that without that very tight limit on my margin usage and keeping it very heavily controlled, I would have blown my account up. Counter trading, while it is an incredible way to profit and an impressive way of property, it does have its risks. So let's continue with our analysis. We have a bit more accumulation, but you can see here we went from $76 margin down to $53, down to $33, just from that incredible sellout. We literally cleared half our margin in a massive complete selling or closing of these positions. Now we pick up and buy more accumulations, and you see the amount or the units purchased. And we pick up some more sells along the way. And this is where we are at right now within the market. But that sell-off, or I should say both of the sell-offs, brought an incredible amount of profitability to the account in a very short amount of time. This type of a grid bot system is remarkable because you're not trying to trace and capture the retracement or the reversals. You're simply letting them happen, and when they do, you're already in position to capture that moment, to profit from that moment, and to literally have a windfall of profits within a remarkable short period of time. This is just the tip of what this bot is capable of doing. On the long run, over the course of a month, 2 months, 3 months, this could potentially happen dozens of times, with each time really escalating the account to a whole new level of profitability that didn't previously exist or was possible given the current limits it had in budget at that time. Research is what led to this point. Understanding the market, understanding your risks, understanding your budget. All of these factors play together. They are not individual, but rather a combination that at the right time, under the right conditions, produce amazing results. I hope this explains better why counter trading can be so popular. I should say it is so popular and can be so profitable. But I hope I've also made clear why the risks are there and why you have to really understand those risks clearly to truly get the benefits from it. This can be a disaster if you aren't properly prepared. But if you've prepared properly if you've done your research, if you've spent time studying the asset, this can be an amazingly profitable technique. Thank you for watching. Please subscribe to my Patreon, where I talk more about all of the behind-the-scenes details that go into automated trading, algorithmic trading, and the combination. I also show you some of the things that I don't necessarily put up here on YouTube. Like, share the video, comment, and thank you. Until next time.